All right, hello everyone. Welcome to another episode of Trading Bitcoin with your host Tone Vays, joined by my guest Willy Woo. It is morning in some parts of the world. Willy, good morning to you, man.
Good morning from Hong Kong. How you guys going over there?
All right, I like your carnivore shirt, man. I should have worn one of my carnivore shirts. I'm still wearing the same shirt from the earlier video that I did today within the last 24 hours, anyway. And hey everyone, thanks for joining. It's going to be a great episode. Willy Woo has been on the show many times. The man doesn't really need an introduction, but just in case, let's Willy, go ahead and say a few words. I should probably pull up your Twitter feed and your website, but maybe you'll do that when you do screen share. When you go to your screen share, you're gonna go straight to the charts, but Willy's Twitter is in the video description, so feel free and check that out. All right, Willy, floor is yours. A little intro, and then we're going right into your charts. I did my charts about 12 hours ago, so I'm good.
Great. Well, most of you guys know I do on-chain analysis. It's kind of divining the capital flows on the Bitcoin blockchain to give us an idea where the price may move or the directionality might move in the coming weeks and months. So yeah, that stuff sort of started off in what, 2016, 2017, and now it's a fully fledged industry. You got people like Coinmetrics, Fastnode providing data to quant funds. And so I'll just share some screens and give you a lot of the stuff I've been working on the last week. Actually, this is going to be regurgitation of really much what I've been tweeting. Like I tweeted, follow me on Woonomic if you guys don't already. Let me just share a screen here.
Yeah, his Twitter is in the video description, guys. Just pull down the video description. You can click right onto Willy's Twitter.
Let me get my screen shared. Can I see that, Tone? Is that coming through?
Yes, it is.
Okay. Let's see, what do we got? Twitter. This is the, let's have a look. I'm just pull up my own, let's pull up my own profile here. Just see what I've been tweeting. Been working on a few things the last few weeks, and I've been looking into this whole DeFi thing, which has popped in the last week or two. That's been interesting just to have a little look inside what's happening there, because it's taken most of the altcoiners, and that's what they're talking about.
How many brain cells are you losing per hour researching DeFi?
Oh my God, this stuff is interesting. It's like, it's whale games, guys. You're paying like, well, when it popped, it was like $400 or $500 to unlock from liquidity pools and shit like that. So like, there's this game played by whales against whales. So all the little guys got priced out. That was the interesting thing. Like you were being charged, even when it wasn't congested, like $30 to do a transaction on DeFi. So you really needed tens, if not hundreds, if not millions in dollar term position sizes before the fees dropped off to insignificant. So it was really that was an interesting. It was actually the experience of it is quite good. Like unlike exchanges where you need someone to take the other side of the trade, all of DeFi is built on liquidity pools, a little bit like we do in Level with proper market making algos. They do smart contracts liquidity pools. So there's always an algorithmic like determination of what price you get and other people footing the other side of liquidity. So everybody's taking market orders and you're on the other side of the trade if you want to provide liquidity. So that's where you got everyone kind of yield farming by providing that liquidity. And yeah, anyway, I just had a quick look. It was interesting, really interesting. Lots of money was being made because this was just money being minted that got printed and then re-injected in with new tokens. So I was just gonna go back and look at, yeah, here we go. So this was, I tweeted this, what, Yeah, so that was like almost 3 weeks ago, maybe 3 weeks ago. And we're looking here at essentially movements in coins, and we had a bump here when we were up in this 12,000, and each movement, peak and movement of coins tends to reverse direction. And so this is kind of a new thing I've been looking at, and it seems to be working very well. And I was saying, look, we're going to have another impulse. The last impulse, this impulse here tells me there might be a change of direction, look pretty probable. And what we saw from that point, well, in this tweet, I also noticed there was a net distribution of coins. Like this is OBV, which can detect, it takes into account the price with volume, and ultimately the down moves carried more volume, and you could see there was like a net distribution of coins, even though the price was running up. And that's like hidden sell-off as price is running up, not a good sign.
Hey,
And Willy,
I'm sorry. Go. Can you go back to that last graphic?
this one?
Yeah.
Yeah.
Dude, my biggest pet peeve with people that do screenshots of charts that manage to cut off either the x-axis or the y-axis drives me nuts. So please, next time you do this, please have the price scale on the right side.
Oh, why? I'm just showing directionality. This is all that matters. You don't need to look at price here. This is like price running up, OBV running down. Yeah, so that's all you need to look at. You don't need to confuse yourself with price. You don't have to look at what the number. No one looks at what the number is on the OBV. You need to look at the
not
trend.
OBV. No, not OBV, but the price chart, because because I look at price every day, and the price basically is an easy way for me to tell what day like it is and compare it to now, because in real time when you look at it, the price doesn't matter. But if someone looks at this tweet like 3 weeks after it was posted, you're like, oh crap, so what price was it when you took the snapshot compared to what it is now?
Right, okay, yeah. All right, fair enough. Anyway, let's move on. What blah 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 blah. And I was saying that, look, we had the CME gap here on the daily. It has always been filled on the daily since the CME came into effect. When did it come into effect? Was it tail end of 2017? And then I tweeted this, that we probably will come down, test this channel, this long-term bearish resistance, which we broke through. We probably have to retest that before going up. And likely that gap inside there, which the CME gap on the daily, I thought that had a good chance of filling, and that had a nice sort of confluence there with that upper, or that resistance channel that was that we had to break through. So that's what I tweeted 2 weeks ago, and then what happened?
Yeah, we missed it. We missed it by like $300.
Yeah, it got front run, which we'll see later. And like what actually, what happened later? Let's go back to my profile and see what happened.
And I really want to see what the first chart you showed, the one that you had pinned, that first chart. I really want to see what it looks like now. So, and we can zoom in.
Sure thing. So let's have a look. I should just pull up TradingView really, but yeah, that's actually what happened here. Here's it. So that got tweeted out around here where that big red candle was, and we started a price collapse. A lot of people ran for the doors, and then around this point, if you had been watching the order books, which I had for 24 hours straight, I was looking at the order books. It got really weird around here. Like there was this one buy wall that was moving on BitMEX, and it kept it's a scare wall. And everyone it kind of scared the price upwards on BitMEX anyway, and it just kept going up. If you had gone down into, say, the half-hour, hourly, even 4-hour candles, it was just a run of green candles without any pullback, which you don't normally see until it broke this downward channel. And then I think everyone cut their shorts and it started to move more organically. And then it dumped at this point. So my reckoning is that we had still some whales that hadn't finished getting rid of their long positions. They were probably needing to load up fully on their shorts, and they were shepherding that up to get the final run back up the truck before you let it drop. And right about here, I was like, you know, it was going the opposite direction to what On-Chain was saying. And then this whole thing dropped, and then suddenly that chart became a genius chart. And this gap in here is the CME gap. And we, you know, if you were to look into what happened, thank you, Zoom, for putting a widget in front of my tab.
You can move that. You can move that. You can like drag it to another part of your computer.
Good, thank you. All right, so can you guys see this okay? This is Trading Light. Tensor Charts has it. It's a heat map of where the orders are. This is the Binance spot books, and you can see that back in, as this whole thing was dropping, everyone put their bids down real hard into that gap, expecting to get fills, and suddenly we started to see it. Every down wick was snapped up. You know, you see these little wicks where it, like here, it just smashed down to there, and it got brought up real quick. And so we had a lot of these wicks snapping up whenever it entered anything close to that gap. So I was losing confidence at this point that we'd ever fill this gap, because it's been front run for liquidity at this point. And then we started to see more spot orders starting to be stacked up. And, you know, that was a good time to load up on some longs, I would say. But it was still a bit risky because the gap has never been, never failed before. So I think a lot of people, including myself, was a little bit apprehensive about like going full DGN long in this zone. And yeah, like what happened, and I had, of course, the early view of it, and I did tweet out on my, I just said On-Chain was switching bullish around this zone here while everything looked like a mayhem. And I didn't say why, because I didn't want to publish exactly, because it was kind of, it was still pretty, I wouldn't see, what I was seeing was this, you know, we saw coins changing hands up in this zone here, and I started to see another spike of coins changing hands here, and it had just started to form that peak. And I didn't know if it was going to be a bigger peak up here, but it started to look healthy. And right about when this peak was fully formed, I went and tweeted out this latest tweet, which here with this chart, and that we had a fully formed peak here, and that's the bullish impulse here, where it's taken the other side of the trade to these coins moving. And so that to me confirmed with high probability that it wasn't going to catastrophically drop. Like we've got this, you guys see that on Reddit, there was like this this meme chart where they were comparing this zone in here in candles. I think it was a 4-hour candle or daily candle. And they were saying the fractal looked like this zone in here, and people were scared we're in for this catastrophic drop. And this, bear in mind, is a white swan. It's a COVID event. It's like a 1 in 100-year pandemic, and that hitting the market. And we didn't see any of this stuff, and we're starting to see this. So I tweeted that we're not likely, it's very unlikely we're going to have another catastrophic drop. I wasn't sure if we'd get a dip into the gap to really fill it. I think if it had filled, there would be no more bear cases for Bitcoin in this zone, this trading zone here, because if you were to zoom out, oh wait, any questions? Because I'm going to move on to the next chart. Tone's telling me to pause and ask for questions.
Yeah, mostly from me. Yeah, no, I did not see a big catastrophic fall like in early March. I was expecting a fall down to about 9. I was allowing for a fall as low as 7K, but I don't see Bitcoin going below 7K. I mean, there's always a chance anything can happen, but I give it like a 3% chance Bitcoin is going below 7,000 ever again.
Yeah.
And that chance is going to dwindle a lot once this year ends.
Yeah, I like even people, you know, these people saying it's going to 5, it's going to 3, and like I never comment on that kind of stuff because it's pointless. But seriously, it's just almost a joke. If you know the price and trading pattern of Bitcoin and how the fundamentals work, there's literally a price floor around 5,000 to 6,000 around the mining. Historically, you can only deviate from the norms a certain degree, and the miners will stop dumping. They start accumulating, and post halvening that doubled. You know, the mining floor was actually hit in the COVID crash. Up in the 4,000 high threes, it actually dipped into it and it got bought up really quick. And then now with the latest generation of more efficient hardware coming out, and also the post halvening, it's don't quote me on it. You'd have to talk to a miner, but I think it's up around the $5,000 to $6,000 mark. So and you need something very catastrophic for us to whip down into that, given the momentum is upwards right now.
I got a bunch of buy orders set up around 9K. I really thought that Bitcoin would have gone to closer to 9K over this past week, but I'm not ruling it out to go back to 9K over the next few weeks. But if it doesn't go to 9K by middle of October, I think the probability of going below 10K is very, very small. This is like the last shot over the next month or two, and that's it.
Yeah, it feels like as time goes on, it's going to be very, very hard to go sub 10K. And I think we're like, my picture when we did this dip here was I thought we would do a V bottom and then triangle up like this. And I mean, it was a little bit flatter, and now we're moving up like this. And I think we might actually repeat a mini version of this fractal. We'll hit the 11Ks and we'll have to bash through it a little bit. We'll get a low volatility band as we go through, and maybe we sneak up past it. On the bigger picture, it'll look like it slices through. Like just, oh my God, you know, I think the big news of this week is MicroStrategy buying another 175 mil of Bitcoin on the spot market.
Well, that's the actual Bitcoin, like that's the news that matters to you, man. But if you pay attention to the crypto Twitter drama, it's all about Andreas Antonopoulos right now. Holy shit.
Oh, really? Okay. I don't read Twitter that much, to be honest. But this one I've been, if anyone's caught the Pomp podcast, it's well worth listening to. It's a really interesting take. I want to speak about to the latest drama, but so MicroStrategy is really the first company that has put its cash treasury, like many companies that are publicly traded, they're sitting on hundreds of millions and billions of dollars of cash. And he quoted that if you were to measure inflation in real term, not consumer price index, where they track the price of essentially consumables, the cost of living, food, that sort of thing. If you ignore that and you look at the stuff you really want to own, like a house, that sort of stuff in real terms, he's saying that the stuff that we really want to own has a real rate of inflation of 7% per annum. And like we've got 35,000 companies, publicly traded companies, holding a combined value of $5 trillion in cash reserves that they don't need.
That's
they don't know what to do with.
That's 5 times the size of the Bitcoin market.
It is 25 times the market cap of Bitcoin.
25
But that's
times.
market cap. So if we were to say $5 trillion all went into Bitcoin, of course it won't, but at $5 trillion it all went into Bitcoin, the market cap of Bitcoin would climb by 20 to 40 times higher than that. So the market cap of Bitcoin would go
yeah, no, because
potentially,
because Satoshi ain't selling his coins and I'm not selling mine.
yeah,
So.
it's what we call, it's reflexive, right? And like we put $1 into Bitcoin, the market cap increases by $20 to $40 at the last measurement. So like 5 trillion, so well, what is that? That's just, is it $200 trillion market cap? So that gives you an idea. This is why it's the biggest news. Is like MicroStrategy went all in. They said we put in $425 million of their cash reserve, which was all of it, into Bitcoin. They are market intelligence people. They provide, well, the CEO is a rocket scientist. He spent his career building software to analyze business intelligence, and he's saying, look, you know, we're sitting on a lot of cash right now. We're very efficient. We don't need to use this cash. And it's wasting away at whatever, 7% per annum being in cash. So let's park it in Bitcoin. I'm prepared to hold it for 99 years. And it takes about 9 months for this from decision to actually go, right? If you're going to go, let's make this decision, it's going to take 9 months for a public trade company, maybe up to 12 months. They did it in 6 months because they're nimble, to actually deploy this capital into Bitcoin. So like, okay, 9 months from now, we've first got a very respected company with very solid reasons, with numbers backing it, going into Bitcoin. Let's wait 9 months and see what happens. But this is a game changer.
Willy, but they're already in.
Who? What? The 35,000 companies with $5 trillion ready to go in?
Oh, no, don't buy that. I'm talking about MicroStrategy is already bought, but other companies are.
They're in, yeah. In MicroStrategy, one company with only $500 million of cash reserves, right, if I did the figures on it, them themselves, they're equivalent of a 3.5% gain on Bitcoin price for their reserves, their treasury to go in. So that's like what is it? It's not a $700 price gain. That is, by the way, that's a price gain of the floor, fundamental floor, because they aren't going to sell. They're saying. So now we've ratcheted the floor $700. You know, we can whipsaw up and down as BitMEX whales screw around with strategy, liquidating each other. But essentially, the floor has now gone up $700, and that's big, you know. So that's what we're doing, you know. The floor is ratcheting up. As we play around the 10,000, the dips are going to get less and less as these long-term buyers come in. Spot. The other thing is, like, you know, he said, like, have you noticed the volatility has dropped a little? And he said that's because they were buying up every dip, so it couldn't drop any further.
Yeah.
So he's saying, and this is true, this is what we've seen. If you look at the price on the charts since 2017, you'll notice something really interesting. You'll notice the volatility starting to climb, and it's breaking this crazy long trend of reducing volatility. Let's pull up my volatility chart. Like we saw from 2009, the peaks of volatility were dropping very consistently, here, and to the point that when I did this analysis in 2016, I said Bitcoin's on track at current rate to start to drop into the volatility you see in fiat currencies. New Zealand dollars actually was the highest volatility traded Forex currency. And Bitcoin was going to match that in 2019. It was a false prediction because what happened here was the rise of derivative traders and BitMEX, 100% leverage. You could push the price around. And we started to see these very large whipsaw. It doesn't take a genius to look at these organic movements. have changed. And now in this 2018 onward phase, we're seeing these large whipsaws in price going all over the place. And that's because the derivative traders have taken precedence. Their volumes are in the multi-billion dollars per day compared to the spot markets, which are, you know, an order of magnitude lower. And what we need to see is more spot trading. And when you have one entity like MicroStrategy coming in and putting a floor on price, you start to see volatility reducing. If we get more of this, you start to see the volatility reduce in Bitcoins as the spot market volumes start to outpower or reverse the trend of the derivatives coming in. You know, the derivatives are unregulated. All the ones with major volume, CME is about the only futures exchange that I know of that is fully regulated for institutionals, and their volumes are quite small compared to the combined volume of BitMEX, Binance, Bybit, FTX, all combined. These guys dwarf the CME, and so, you know, the CME. What's the leverage on CME, Tone? Do you know? Is it like 3 or 5x max?
It's when they launched, it was 5. I don't know if they changed it or not.
Yeah, so there you have it. And we've got literally, if you're a whale player, you can go up to 10x. And if you're a small player, you can make it up for higher leverage and go up to what, 150x on FTX? Is it higher in some of these other ones? So crazy amounts of leverage, crazy amounts of whipsawing. Anyway, that's a sidetrack. But that's to speak of this 10,000 mark we've been playing with. It's like I'm seeing that the dips are ratcheting upwards higher and higher, and so there's a floor rising, and we have to get past this. We have to get past this resistance band upper in the, I think all the way up to 14,000 actually. Like. I need it.
Yeah, see, I'm a little skeptical on Bitcoin crossing 14,000 this year. I think that's a lofty goal. I think we won't cross that until next year. Because I think even if we get to 14,000, I think we'll pull back from there.
Let's have a look. All right, this is us. So this is where my cursor is here. Now let's just drag it. That's to the end of that. So will we get above this point here? I mean, yeah, like looking at it, we're doing a lot of sideways chop on the bigger picture. My picture of this is we're going to take some time to wind up. We're going to take some time to wind up, but once we wind up, this thing will go. And I don't know how high it'll go, but I'm pretty sure we're going to go above 100,000 on this cycle. 250, I don't know. Like,
yeah,
we're in a really good zone.
That's in line with what Plan B is saying with his stock to flow model. I think there's going to be a big, I think 45,000 is a reasonable top, because look, the market caps, like, people don't realize how much it actually scales. Like, for example, it's a lot easier to push Bitcoin from 1,000 to 20,000 than from 20,000 to 40,000. I know on a log chart, it just seems like a doubling, but that's a lot of market cap to move.
So, like, when we're in this part, I've just pulled, by the way, guys, I've just pulled 2 models. One is the CVDD. I should call that a little bit something more human, like
yes.
the floor model. And this is easy. This is called the top model.
I know that now it looks like the COVID model.
Right. And so, so we're always going with it. Oh yeah, I want to talk about reflexivity in the market. You know, fancy word for something that circles in on itself. So, like in Bitcoin, once this asset starts running, no one wants to sell. This is a very scarce asset. No one's printing more of it. And so no one wants to sell. So you get into this phase of the bull market where the thing feeds on itself. And it takes a while for us to get out of this. We coil up. We have to get through to this point where people start to go, oh, shit, this thing's going to run and no one wants to sell. So there's low liquidity on the sell side. So every buy pushes it higher and higher and higher until you get this blow off where no new buyers want to come in at that price because it's just ridiculously, you know, and what, it was double, it's doubled in a week. No, I'm not buying now. And so you need to wait for that before the thing starts to settle down. And so we're in this zone where this thing's coiling and it has to push through the sellers until the sellers start to create that reflexivity by saying, I'm not selling anymore. And so, sure, you know, we can go into the zone to the end of this year where we're still working through these resistances where people are still bearish. Once we get past the 14, there's not a lot of resistance. Monthly close above 14 is where we traditionally will run. It's a monthly close above the prior all-time high. We had a monthly close of 14,000 on that peak there. So if we get that, and that might take some time, we'll start to see this run up. And then the question is, what target will it hit? And already the target is $80,000 on the top model. And you can see as this thing starts to run up, the top model starts to curve upwards. And it's just time dependent. So already, if you were to start to look at these curves of where they might go, that number 2 is $200,000 for a top if we hit it in 2022. So according to this model, you can go all the way up there. Like right now, once we get into this above the prior highs, and this thing becomes reflexive, we're going to start to hockey stick upwards. No one's going to sell. It's all being scooped up off the market right now. The strong hands are scooping it up. So I don't know where the top is, but it'll be healthy. I think 100,000 is super, super low ball. Yeah, it might take time. It might not happen. It might not even happen next year. But like from everything I've heard, the big players are not coming in this year. This is the year that they're getting all their ducks in a row to be able to do it. That's concurred by MicroStrategy CEO saying that it's going to take 9 months as well for them. We've got institutional players coming in. We've got, even treasuries like sovereign wealth funds, I think, are researching this. So they take a year. The earliest ones take a year to go through that process. So I think maybe we get some of that next year starting to come in, and then this thing runs, and that'll take us to a $1 trillion market cap, which it's within 10x of gold, and we become a legitimate asset class by then. So that's a little bit of a sidetrack, but based on the news of this week, some very bullish fundamentals happening when we look 1 year out. I think that's so stuff's in play now that will play out in 1 year just on fundamentals. And so let me just carry on with
yeah, no, go on. I don't really have any questions on that. That looks absolutely awesome. And I would love to see Bitcoin hit 200,000. I would love to be wrong. I would love for it not to pull back from 45 back down to the $10,000 area. I would love to see it run all the way to 200K before a pullback. So that'd be awesome.
Yeah, the only downside to a 200K is that we're going to have all that stupid Lambo talk again.
Well, the other thing is, look, here's the concern, and you have to agree with this. The faster we get to 100,000 or 200,000, the bigger the crash then after. If we get there real slow, you really don't have that much to worry about of a crash.
Yeah. It's I think I haven't thought about how hard the next bear market will go. I haven't put much thought into it. I don't know if anyone's got some thoughts. Like the players that come in this time around tend to be long-term players, but also sophisticated. So would they sell the top?
Yeah, look,
So
a lot of people are long-term players, but the smart people will get out if they go up 4 or 5x.
yeah, I'm like thinking like if you're gonna buy you know, $500 million of Bitcoin, you're not very agile. Um, yeah, maybe someone smarter than me can think about what the next cycle. It's, you know, like we don't know what the narrative for the next cycle is in this cycle, not yet, unless someone has done a lot of work on it. But yeah, I'm not sure. What we're seeing here is these cycles are somewhat flattening. You can see they are reducing, right? The volatility is, well, this is a outlier cycle where this is the era of derivative exchanges. This is the era of Silk Road. This is the era of Mount Gox. Okay, this is the era of the scaling wars. But this is the era of the derivative exchanges. And with that, the narrative is high leverage, and the impact on the price chart is whipsaw. So as the new guys come in, they're going to smooth that out. So I could see the natural reduction in volatility coming back, but also as these derivative guys get diluted out with more spot, maybe we won't see the same kind of crazy pullback. We had some crazy pullback here because we had very large volume ability to short, and that volume was that was just, yeah, totally overrunning the spot markets. So, but you know, I pulled up this chart for a reason. This is the difficulty ribbon. Like, for those that are not familiar with it, it is essentially the difficulty of network. Essentially, as more miners join in to mine this Bitcoin, Bitcoin makes it more difficult for them to and so they have to they compete against themselves. No matter how many people join in, Bitcoin regulates that by adjusting the difficulty. So, you know, normally it goes up because there's more hash power coming in to mine it. And then you get these zones where we get a compression, which is, these are just moving averages. So as moving averages start to reverse, you'll see them compress. And that's the reason I've done a ribbon, because you can very visually see the zones in which the hash rate isn't growing like it used to. And what's actually happening there is that miners are not growing their hash rate. And sometimes, like here, you'll see that the hash rate is actually dropping, the difficulty is dropping in response to the reduction in miners. And that's essentially the zone in which miners are committing harikari, and they're being squeezed out of the market. And they get squeezed out of the market, they've still got operational costs. They have to sell out, they dump their coins, they're essentially liquidated to pay off their debts and infrastructure costs. So, you know, what happens when you dump your coins? The price goes down. So the next weakest miner gets liquidated and so forth. So this is the equivalent of a miner's liquidation, a miner's squeeze, as they all go out of business until the biggest, baddest miner is going, I'll scoop the bottom. I'm not going out of business. All you weak guys are out of business. So at that point, it can't go any lower. And then there's no more dumpage. And we see this, the natural occurrence of new miners that are more efficient come in. So this ribbon tells the story of weak miner culling and the next generation of strong miners coming in. And we obviously had that with this crazy 6K down to 3K like collapse. And what we're doing right now is you know, you also get them in this zone here where the halvening happens. Obviously, you're getting half the number of coins for the amount of energy you've put in, and the price hasn't doubled immediately. So you're put under pressure. And after the halving, you tend to see a bit of compression. And we're doing that right now. And so we've seen it before. We expand out of it. And this is actually part of what is driving the stock to flow, saying we should be much higher in price. And what I like to look for, because there's never been a compression without it playing out. There's a compression that played out. There's the compression and recovery in this zone here, and that played out there. Even these little ones played out, certainly played out there. And in this zone here, we had a compression. I traded that one hard. I went 10x leverage on that because it was the first time I saw a compression in a long time. And other fundamentals back that up. And what's happening here is that we've had a compression, and you look at it, like this is the normal expanse. We're coming out of it. Like, so this is like a nice kind of mid macro indicator. I'd say it's good for 3 months, a 3-month look ahead. You're not gonna go wrong if you're buying and holding for the next year or so. The next 3 months forecast looks great, you know. And so, you know, that this shorter impulse said, look, we're likely to do a price recovery here. Zoom out on the picture. We're going to say next 3 months looks really bullish. After the next 3 months, I can pretty much, I'm very, very confident that we will never, ever, ever dip below 10,000 again after the next 3 months. So 2021, I don't think we'll ever come back to this 10K mark.
No,
and then
I agree. I think once we get out of 2020, I mean, it's possible we're getting out of 2020 under 10,000. I can see that possibility. Let's say we're at 9,500 on December 31st of 2020. Once we break that 10,000, I don't see us going below it. That's assuming we're going into 2021 under 10K. And if we go into 2021 above 10K, I don't see us going below 10K. With one minor exception, if we rally really quick to about 15K over the next, let's say, 2 months, I can see like that final capitulation drop down to just below 10K and then having a very fast V-shaped recovery to 20.
Yeah, it's funny, yeah. It's like once we get above in the 15Ks, there's a lot of price discovery in this zone here that's going to be hard to cut and dip through.
Right.
So
it depends on how fast we get there. See, it's all about how fast we get there for me. The slower we get back to 14, the more likely we are to like explode from 14 up. But the faster we get to 14, the more likely we are to get rejected at 14.
I agree. I think what we're going to see, just from knowing the personality of this Bitcoin price worm that creeps along the chart, is I think it just wants to go sideways upish and nothing too drastic. It's still winding up. It's still winding up. We like I was saying, it's not in the zone where people going, this thing's ripping. We have a lot of people scoffing at Bitcoin. You know, they're saying, look, gold's running, what's Bitcoin doing, what not. And like those guys, and like, yeah, that's going to take some time. We've got to get out of the sideways band. So I don't think we're going to, like, I think there's a chance we'll fill the CME gap around the 9,600. At that point, there's no more bearish cases for me. I think it would be very hard pressure to go below 9,000. We'd need something catastrophic. Like, oh, maybe what was that thing? Kiyosaki, Rich Dad, Poor Dad, he's a Bitcoiner. He said that a vaccine for COVID may create a bit of a flash to buy the dip. Because it essentially reassesses everyone's risk adjustments, you know, risk exposure. We saw that in, I was going to tweak that actually. We saw this in COVID. See this here? This is Bitcoin being this is Bitcoin being priced in on new risk assumptions on a new world as it stands post-COVID. So this is how Bitcoin fared. It went from $10,000 to $10,000. But during that phase, while people were reassessing their portfolios, it dipped to 5,000 on the daily, it dipped to 4,000 on the hourly. So it halved before people figured out that this is where they need to be in their portfolios. So if we did have a vaccine, we'll probably get a bit of a down and up move, because people are going to sell off and they're going to reallocate, and then I think ultimately it'll be sideways. But that might cause a dip down into the below the 9,000s, I guess, if you suddenly saw a vaccine come in. Just speculating, but on what might be needed to push it to these real lows. So anyway, any questions?
Yeah, we actually
look at the chat room.
Well, we have some good questions from the audience, but also I'm looking at your upcoming tabs, and you don't seem to have the HODL ribbon. So that's people are asking for that.
Oh, the HODL wave. Yeah, I was just pulling it off a public chart, and I guess I haven't looked into it a while. Are you guys talking about the HODL wave? HODL wave?
Yeah.
Yeah. I can
the HODL wave.
I can probably pull that out and give you a better one, which is based on active supply, courtesy of Coinmetrics. They have given me permission to publish that to the public. So I might as well just release that so people can see what's going on.
So is that something you can do on this show, or something for next time?
You guys want to see it now? Do you?
Yeah. Some people ask for that now, but maybe we. So as you,
I can pull that up. Let me just.
As you're pulling that up, may I have a couple of questions? Hopefully, we can answer them really quick. One of them is, how possible is a huge Bitcoin price drop in the next 2 months? Well, we have to define huge. I think that the worst case scenario is Bitcoin down to 7,000. A more realistic scenario is a drop to about 9,000. And if that doesn't happen in the next few months, it's probably not going to happen.
Yeah, I think I answered it earlier. Just looking at. Yeah, I think I answered that one. Let me share my screen. Let me find.
And the other question is, I personally don't care about the CME gap, but Willy, you seem to care about the CME gap, and people are asking, what is the significance? What is the big importance?
Okay, so generally the theory on it is that you know, when price rips so fast past a certain point and you get a complete gap from one candle to the next, there was zero liquidity being traded in there. And, you know, common sense says that we never price discovered inside that gap, and we just got carried away, either in a drop or a pump. And so usually price comes back and rediscovers that area, fills it in before moving on. And this has become so common now that whenever we see a gap, a liquidity gap, it does come back, fill in, play around, price discovery there, and move on. So it's become a trader's self-fulfilling prophecy. We all start to trade towards that. Like if I see a gap and below us and it hasn't been filled, I'm going to be very cautious on my long, because traders are probably not going to be as bullish. They might have more selling pressure as in the next time you run into a resistance band. And so if you were to look at the CME, which trades on normal like trading hours, it's not like 24/7 like we have in native Bitcoin markets. You'll get gaps because, you know, you'll get gaps when the market CME closes overnight. You'll get bigger gaps when the CME closes for the weekend. And if you were to look at the Bitcoin CME chart on the 4-hour candle, 75% of the gaps on the 4-hour well, it's 95% of them get filled on the 4-hour, and 100% up to this gap has been filled on the daily candle. So if you're a trader and you're trading with probabilities, like say a professional poker player will play poker on probabilities, they will just keep playing to those stats, then you would not ignore the CME gap, because you'd be stupid to. The backtrace says 100% fill rate to date, 95% fill rate on a 4-hour. So yeah, I care about it. And then people who don't care about it say, well, it's just the cap. Who gives a shit about whether the CME it's just one tiny little exchange? Well, I'm just doing statistics. So, and this might be the first that doesn't get filled. This might be the first, because I'm seeing a lot of front running. So, you know, it's not always a sure bet, but if you're going to play to the statistics, then you'd be wise to heed it. I've just pulled up this hodl wave chart. The difference between this chart and your standard hodl waves is that coin metrics look at the coins that are active and filters out the ones that aren't active. You might have to talk to them about what the hell that means in terms of specific rules that they use, the heuristics that they use. But, you know, like one thing is hodl waves is 100% all the time. This one, the ceiling is only the active. I guess that's 100%, but you can see from there, this is 7 years, I think, that one, that color there is 7, or was it 5? Yeah, it's okay. Anything that's had activity within 5 years is that top ceiling. So these coins here above this zone is essentially no activity in 5 years or longer. And that's what we have. I don't know what people want to see in there. It does give you a nice idea of which coins are moving when they do move. You kind of see the silhouette of the price movements in here, reflect the price movement. The coin movements reflect the price. So we had a lot of activity. So if I was to turn off these lower bands here, which tend to get a bit noisy, let's go 30-day. So activity under 30 days is under here. Okay. Then it goes into the longer term sort of movement. You can kind of see like what that is. At this point, at the height of the last bull market, half the supply of Bitcoin has been moving within the last 180 days. And that tells you where, there's a lot of coins changing. A lot of the supply of coins are changing hands. When we're in bear markets, we're down to like, essentially a quarter of the coins. And so you can get an idea of where we sit. We're actually in this zone here. We're, in the sort of yawn, not a lot of stuff happening. It talks to what I was saying before. We've got a lot of, work to do before the market starts to FOMO. And you will start to see this red line start to pick up as we start to get into this reflexive part of the market, especially around here. If you start to see this start to leap up, I think that's when old long-term investors say, okay, that's at a price where I'm no longer going to hold on as strong, and I'm going to start selling. So some of these older coins start to wake up. And yeah, so this is the hodl wave. Like, who was it that did it? Was it, you remember, Tone? One of the quant funds did that. It was one of the early charts we had. Let's have a look.
No, I don't.
Here's the live one on my
Yeah,
chart.
there it is.
Yeah, see, it's broken. But that's, yeah, Unchained Capital. Those guys did that. They did it the legit way. You know, I think they put a node on the network, pulled the blockchain data, and you know, filtered it. Now we get the stuff done for almost free for us by providers like Coinmetrics and Glassnode. So yeah, that's that. And okay, questions. Do I do my own channel? No, I do not do my own channel.
Oh God, you're looking at the live chat. That's never a good idea.
Well, I still use MVT. Oh, thank you. That's a good segue. Segue,
Yep,
it's the next one.
that's the title in his next chart.
Okay, this is RVT. RVT. Let's go to MVT. MVT ratio. MVT ratio. So MVT was billed as the price earnings chart for Bitcoin. It's not a company, it doesn't have earnings, but earnings tell you in a company how much real activity is happening in the company given to its given when compared to its valuation. So Bitcoin doesn't have profitability. You know, it's not selling widgets. It's an investment. It's an investment asset. So when we see activity in the investment, that's the activity. So you want to see high amounts of investment moving. And so we look on chain to look at how much money is moving between investors. And then we compare that to the price. So that's your price earnings. It's the price to the amount of investment activity happening. So when MVT is low, it's like a low price earnings. You've got a very low valuation to the given activity that's happening on chain. And so MVT's been drifting upwards because we're starting to see a lot of different behaviors, like more activity happening off the chain. Obviously, things are going to move onto layer 2 over certain terms, and part of that layer 2 is exchanges. A lot of people now keeping money on exchanges, so a lot of investment activity sits on Coinbase wallets and so forth, Kraken wallets, Binance wallets, and it doesn't hit the chain. So we start to see a lot of volume moving off it, even though the activity is there. So you'll see this drift upwards. And I tried to correct for that by using moving averages to try and track it. When it dips to the lower moving average, it's better for buying. And when it's high, it's, you know, like a high price earnings, probably not a great time to buy more. So along comes Coinmetrics, Nick Carter and his team, and they did this thing called realized cap, realized price. And it's essentially what people paid for their coins. You can see like, oh, those coins moved at such and such date. What price was those coins at that date? And then you can see what price people paid for their coins by looking at when they moved into that wallet. And so essentially you have this thing called realized value. And if you go to my price model chart, it's this orange line, and that's tracking what the entire market paid for their coins sitting in their self-custodial sovereign wallets, not your derivative traders on BitMEX. It's actually what's sitting in these coin wallets based on when they bought them. So actually everyone's in profit right now. At the market as an average is in this much profit, because everybody, if we were to take the average volume weighted price that people paid was $6,200 for their coins right now. It's very, very, very seldom do you see Bitcoiners at a loss. And when they are at a loss, that's where price crosses below this line. Good time to buy, because very seldom. You can see all the prior loss times when the market was at a loss. There, it's by the dip. And we had that, interestingly, in COVID, another fundamental reason why it should be snapped up. And so if you were to look at these as like good areas for floor price, we're at 6,000 here. And it's moving upwards, obviously. And so what RVT does instead of MVT, instead of looking at the transaction rate, instead of looking at the transaction volume from investors and comparing that to the market cap, we're going to compare that to the realized cap, the cumulative money that people paid for their coins gives you another valuation, and it is not going to be this market cap. If I bought like $1 million a coin and I just pumped the price up, everybody's coins would be valued at that, and it's not a very good valuation. But realized cap doesn't. You can see it's not volatile. It's a very organic way of valuing it. So we're going to compare the investor activity to that chart, and that's RVT. And RVT is a much better. It's a much better version of MVT. It's still like a price earnings. It's activity versus a valuation, but the valuation is a better metric, and you get a smoother signal. It doesn't drift as much, and you can see this is where we're at. Like, we're in the lower bounds here. We're in the lower bounds. When we get to the peaks, that's oftentimes where it's advisable to take caution and maybe sell. Sell there, maybe sell a bit there, maybe sell a bit there. There.
Yeah, it's easy to pick the perfect tops in hindsight.
Yeah, see, so like, remember on-chain, I started it with NVT. I think it was one of the, the destruction was early. We had, a few on-chain metrics. NVT was where I think it kicked off reading where we are in the microcycle, and NVT happened around here. And then we had just about every other month in this zone, new indicators being made. And now we can see the structure of the market so clearly that it doesn't take a genius to sell the top.
Yeah, but also at the same time,
which I'll just finish. Which means the next top will take a genius, and I'm not gonna necessarily bet the next peak is gonna work because everyone's looking at these charts. But sorry, you go.
Right. No, I was going to say that the peak in 2019 would have caught people by surprise because it topped significantly earlier than any other peak prior to it going back in history. So looking at this chart, you probably would have just kept holding from June of last year and got yourself into some trouble.
June of last year, like this peak here, eh?
Right. Like
yeah.
Like that's been that seems like, based on that chart alone, that seems like a very lowish top, and you would have expected more by now.
Yeah, I mean, like, if you were in it for a full cycle, and you could say, well, you would have got yourself in trouble by holding there. Looking back here, we're just like, this is the zone to really get involved, right? Once we get out of this bear zone, let's get to buy more at 14,000. But we've already talked about, this is a full macro cycle chart, right? It tells you where you're structured in the market, the macro cycle. So like what? We've got a $3,200 bottom. We're expecting 100 to 250,000 top, and you're saying, damn, I bought at 14,000 and I should have sold, so I could have, caught maybe a 9,000 if I was an absolute quick on my feet, catch a 5,000 on the daily. Then you want to be a genius and trade that when we're looking at a chart that's really looking at these large 4-year cycles with back traces of maybe 3 cycles. The cycle we're talking 3,000 to 200,000. You buy at 14, you buy at 10. It doesn't matter. It really doesn't matter. You're not looking at this chart to time. You're looking at the 4-hour and the 1-day technical chart. Really, if you want to want to trade that. Not this chart. This chart is for your I guess your micro strategy or your large spot holder that's not in today to trade.
Yeah, no, look, I agree. It doesn't really, it's not a big deal if you bought at 14, but the reality is it's not a big deal if you believe in the underlying fundamentals of Bitcoin and you bought with 0 leverage, because even at 2 leverage buying near 14, you got screwed. You lost it all. Because it went
buying 14, I'd still have 14. Like we're not leverage trading, so I'm not liquidated.
Oh, right. That's what I mean. Like even if you bought at like 2x, Bitcoin went down 65-70% from 14 down to 38. It was an unfortunate incident, but it was. So if you bought with any kind of leverage, you were definitely in trouble, even at like the lowest leverage being 2x.
Yeah, you're not. It's not advisable to trade these macro cycles with leverage. You know, not traditional leverage like margin trading. The funding alone may kill you, and you're always up for liquidation risk. You know, maybe you'd take a loan out if you really knew what you were doing, and you would. Like I know a few old hand OGs that you know do that, and they know what they're doing. They get a cash loan and then they go margin and but you're always gonna be up for liquidation. So like it's not advisable to margin trade these long term moves. You margin trading the smaller time cycles. So yeah. So anyway, this chart is to show where we sit in the cycle. I'll tell you actually what happened here. That peak there was formed by Plus Token.
Right. I was waiting for you to say that.
You know, so they had, I believe the number is 170,000 Bitcoins to drop on the market. So
yeah, people really got to stay away from Ponzi schemes. Instead, they just want to demonize you for, you know, stopping them for an opportunity to scam others and get out on top.
let's just multiply this. Yeah, so they have like, we talked about $425 million of Bitcoin to be bought up by MicroStrategy. Plus Token dumped $1.2 billion worth of Bitcoin starting here. Maybe you could call it between $750 million and 1.2, depending on the average price that they started dumping in. And they dumped, and they dumped, and they dumped, right? And this zone here, we were monitoring it as well into this zone here. And this was another reason why I went long inside this zone, is because the dumping had dried up to very small amounts. They dumped most of it, so there wasn't a lot left in their ammo to dump anymore. So it became a safe zone to go long. But that dumpage knocked the valuation of Bitcoin down to this zone here, right? And that's a very specific thing that happened, you know, and we're still, it's still, you know, it's like all it's done is saying, well, we're undervalued. And we've got a long way, you know, we've got a lot of upside. When you were buying here, there's less upside because you can see these peaks are getting lower and lower. I could draw a trend line going down, and probably the 2022 top, or wherever we think the top is going to be in this zone here. If you're buying here, you only got that much of a gap. There's, you know, half of that movement is gone, but now we've got most of it to run. And so it's another reason why we're, you know, to me, like we've had the very short sort of signal of coins changing hands. The impulse is up. Maybe we get another one to say we might come down, but we've just completed an up, and we've got the miners difficulty saying up, and now we've got the full macro saying a lot of room to move up. And so great, buy some coins, sit on it, come back in a year or two.
All right, sounds good. What other charts you got for us, man?
I think that's about it, really. I could say I did show you. I mean, I had the let's have a quick look at what's happening here.
If not, we do have a few more audience questions.
Oh yeah, let's do that. Let's do that.
All right.
Oh, let's just hold on. Let's just see what's happening here. We've got a lot of bids in the zone here. If we pull back down here, we've got bids all the way in the 10,000 and below looks heavily contested. We've got a little bit of a liquidity gap. See there, liquidity gap here on the spot market on Binance. Let's have a look at Coinbase, BTC. Is that happening? Is that working? I don't know what's going on there. Oh, it's shaded out. I don't know why. I'll go to BitMEX. This is where I have no idea why that's not working. Okay, let's move on. Let's move on.
All right, we got a few questions. Andrew, thank you for your super chat question. So let's see what you got for us. Willy, have you noticed the 70% annual price increase corresponding with constant reverse risk indicator levels? Glassnode question mark. And then the person.
Let me see if I can pull that image up. It's been stripped out because.
Yeah, the image's been stripped out, so.
It better not be a Rickroll. It's probably a Rickroll. I.imager. Is that what is actually? Let's just Google. What is it? Imager, Imgur. And go there, and then let's just do this. See if that comes up. Okay, that's the chart he's got. So what's it saying?
I have no idea.
Constant reserve.
Let's see. What
is this? Reserve risk. Oh, I don't know. I haven't looked at reserve risk. What is that?
I don't know what the definition of reserve risk is, but I can look at the chart. Hold on, let me see if anything.
I want to type that into the chat room. So I'm going to Glassnode right now to pull up what reserve risk is. Glassnode reserve risk.
You got anything? I can put mine as well.
Okay, here it is. Let's pull up onto reserve risk is used to assess the confidence of long-term holders relative to the price of an asset at any given point. When confidence is high and the price is low, there's an attractive risk reward. Okay, interesting. So he's measuring the confidence of the long-term holders versus the price. How is it measured? It's the price divided by the HODL bank. That's the HODL bank. HODL bank represents opportunity cost of holding an asset. Each day a coin is held, the owner defers its ability to exchange it for its cash value. This is okay. So HODL bank is the sum of cumulative daily values. Cumulative Hans. I should ask Hans this. Cumulative daily value. That's the key thing. Cumulative daily value. I think what he means is the cumulative value that is in HODL. So I think that means the you multiply the price by it's just a cumulative price.
Well, he's multiplying.
That's a very bad description, Glassnode. We need to break down the key thing, which is these HODL bank is. I'm guessing this is how I would do it. You would look at the coins. it's like Bitcoin stays destroyed, but rather than, it's the opposite to Bitcoin
Right,
stays
it's Bitcoin
destroyed.
days
It's
accumulated.
yes, exactly. It's the coins that aren't being moved. How long have they been in the market?
Right.
So you multiply the time value by their value over that time, and that's their HODL power. And then and actually that goes back to what we were saying earlier with the HODL waves here. Remember the red going up? Those coins are moving. So as they move, you know, they lose their HODL because they've moved.
Right.
And so you know, something that might have stayed there for 2 years is now measured as 1 day, and it's disappeared because it's moved into another wallet.
Right. You're dividing by that HODL value. So you're going to divide by a bigger number the longer you hold your coins.
So then, as that starts to disappear, as people, the old OGs start moving their coins, the HODL starts to evaporate, and this looks like the ratio to price. So we've got right now, like the price isn't reflected in the amount of that cumulative HODL valuation. And then what was the question? Am I comments? What was can we go chat room?
I think it was more of a comment.
Have you noticed the 70% annual price increase corresponding to the risk? Okay, let's have a look at that chart now. Oh, this. Oh, okay. Like he's saying from that bottom to there, it's increased by 70%.
Well, no, he's saying the correlation is 70. Like the charts are very correlated. Willie?
Andrew, can you make some comment?
Anyway, don't worry.
I was like, anyway. Oh, wait. He's like.
Don't worry about it. We have to move on.
Anyway.
We got to move on. We gave it a shot. We got to move on. What are your thoughts on Segwit adoption?
It's been pretty healthy, isn't it? Let's have a look.
It kind of dropped recently. You just go to you have your own charts on that.
Oh, let's go to the live ones.
It kind of dropped, but now it kind of recovered. Could be better.
Segwit adoption. Here we go.
Oh, you had it.
Yeah, that was this is the live chart on that previous one was on my computer. So that's not doing too bad. It's like up here. I don't know what was, I haven't followed the industry close enough to know what that drop was. Does anyone know?
No,
why would it drop?
We still don't know. At least I'm not sure. I gotta ask Jimmy. Maybe I'll try to remember to ask him in the morning. But the fee is definitely going up. You can see that we've been off the lows there this year.
Yeah, the fees are where's the fees? The fees. The blue. Fees is the blues. Yeah, I think not enough has been said about the work that the core devs have been doing since the 2017 year, where you know, you saw this sort of moonage in fees, and Bitcoin got a lot of flack. You know, you got people like Vays forking off to Cash, for Bitcoin Cash, and a whole lot of money went into altcoins, Litecoin, Ethereum, saying, "Oh, look at the low fees here," but very few people have looked at what's happened in the Bitcoin network. And let's have a look at the congestion. Like, there is some amazing work done behind the scenes of Bitcoin. Like, we have never seen this amount. Like, if you were to look at what happened in 2017. We went to near on 100% filled blocks, and in that zone, the whole network locked up. But now this brown line here shows you how much of that 1 megabyte block size, the base block, is being utilized, and we're constantly hitting up around the 90% here. Anything in the 90% in the past started to ramp up our fees. And you can see the the time between blocks starts to go above our 10 minutes here while this sort of congestion happens. And now we're routinely in this zone, and Segwit, which is extending the block size to up to, was it 3.7 or maybe 4 megabytes at peak, depending on how much Segwit is adopted. That's you know, that's taking up the extra room. So the average block right now, I mean, not block size, but the average block is 1.3 megabytes of data. It's not like Bitcoin Cash, which is like, they've got a high ceiling, but it's 0% filled practically. This thing is, we're now filling into 1.3 megabyte blocks, essentially very low fees, very little congestion. This one here is the mempool, which is the backlog of transactions to be processed. And we had a peak here, and the fees hardly did anything. So the Bitcoin network of 2020 is not the Bitcoin network of 2017. There's been a lot of efficiencies built into the system, and I believe we're doing a lot more as well, right? Is there sure signatures coming in that'll?
Oh yeah, the next soft fork is going to be awesome.
Yeah.
It should definitely help a lot.
So yeah, I'm very confident with the work being done in Bitcoin that we're far from a situation where this thing's going to lock up. I think I have a lot of faith from what I've seen in this chart here, that as we come into the red line, very little consequences being both in fees and to confirm times. It's not too bad. We are getting slow confirms right now, probably as bad as it's ever been, but the overall, it's still 15 minutes, which is acceptable.
All right.
Okay.
I think I'm gonna. I don't want to keep you on for too long, Willie. It's been an hour and a half. I'm gonna steal screen share. If you're done sharing, just gonna take a quick peek at my chart. I am at an MRI sell as of today's candle that just ended. So like I said this morning on my podcast, I am looking for a 1 to 4 candle correction or a slowdown. And right now we're basically either on the first, or some consider it the second candle because the top came the candle before. So right now I am looking at a bit of a slowdown. I'm not rushing in to buy. I use GBTC, so the weekend is closed for me. I may consider buying tomorrow, or I'll probably wait until next week. I still think there'll be a little bit of a pullback. Not sure about that 9K anymore, but I'm not even sure about going below 10K anymore. And by the way, Willie, that 128-day moving average that I heard from you for the first time held Bitcoin nicely earlier this month.
Oh yeah, was it someone, none your business, I think, tweeted out that was holding and asked me if I could do a back trace. Did you see that? Yeah. So I actually did a back trace on the 128 moving average as a long short strategy, and it turned out if you'd done it on a daily chart, you would have gone from 1 Bitcoin to 14.5 Bitcoins.
Did you say 14.5?
Yeah, you do a 14.5x.
Oh wait, but how far did you take it though? I mean, like, if you took it back to 2012, that's kind of unrealistic.
Yeah, I took it back to 2012. Why is it unrealistic, Tone? Well, you couldn't do it because you couldn't go short. You couldn't go short.
No, well, that's one reason why it's unrealistic. The other reason is 90% of the people were not there in 2012. So that's why it's unrealistic, because none of the people were Bitcoiners, right? So at least you want to try to take it to like the early mid 2013, when at least some of us get in. Like I wasn't even in 2012.
Oh, I see what you're saying. Yeah.
It's like an unrealistic expectation that you could have done this.
Yeah, I mean, I did the first one, which was the first one was do a spot buy of Bitcoin and a spot sell to USD, and you couldn't short and you couldn't go long more than just being spot exposure. And I think it was like you start off with 1 Bitcoin and you end up with like 1.5 Bitcoin. So you'd still be up by selling off. But the interesting thing with it was a 55% drawdown on BTC basis. So you'd have to be willing to lose up to 55% of your Bitcoins if you were to use that strategy.
Definitely no leverage, just straight up buy sell.
Yeah, just straight up buy sell. That you could do. The 1x long, like you hold Bitcoin, but then you go 1x long, which you could also do. You just borrow some money and buy it with extra cash. That generated something, I can't remember. It was pretty good. I think it was like over 10x in Bitcoin basis if you went long only.
Yeah, no, none of your business does great work. He's in my group chats as well with really, really cool charts. Okay, guys, before I wrap it up, Willie, you want to give us an update on LVL, on level?
LVL, yes. Well, we're launched now in, how many states is it? It sounds like about half of the states in the US. If anyone's been playing DeFi, I don't know, we have a lot of maximalists on the show, but also I think there's a lot of people that play alts, and the big rage with that was yield farming, liquidity providing. You were getting these crazy yields on highly questionable, in a highly questionable game of Ponzi chicken. And I don't know, I think I've met one whale who believed in it out of about 20 whales that were all saying this is just Ponzi chicken. And you're getting these high yields. And the thing is, Level is very much modeled on liquidity providers, which is the autopilot, and then the people that buy, which can do a market buy into it. And so it's a very easy to use interface for people who just want to buy, but the other side of liquidity is done by autopilot. So if you guys want to go in there and provide liquidity, we saw a 10%, the first month was a 10% gain volume weighted across our customers who provided liquidity. So you work that out to a 1-year time frame, and that is a 250% return on your capital there by liquidity farming. But it's not a Ponzi chicken game like you see in DeFi. This is liquidity farming Bitcoin US dollars. Your Bitcoin is held with BitGhost security. So it's not just sitting with Level holding all the keys. You've got a third party there providing extra security, and of course your US dollars is not, again, just sitting on an Ethereum's network, and it's FDIC insured.
Yeah.
US dollars.
And by the way, I mean, you guys have already been a bank for a little while. So this news that Kraken is the first crypto bank, isn't that kind of like wrong?
It's interesting because what actually they've achieved is in the state of Wyoming, they've achieved a state-based banking license. So they can provide banking, but it's not federal banking across all of the US. So they have got that banking license, whereas Level provides banking across 25 states or whatever. That's about half of the states. So it's like there's a lot of publicity around it, but I don't necessarily think the publicity was fully legitimized. Like if we see a crypto bank that's rolled out to the entire, like a federal banking license, that would be much more of a game changer. And I think that'll take a lot of time. It's Wyoming's special because they've got new legislation that makes this possible. And as much as Trace Mayer gets a lot of heat after being involved in his own coin, he did do the draft to the legislature in Wyoming. So he, in my view, he set some of the foundational pieces to work there. Now we can see like things like a local banking license to Kraken being built on top of that. So
oh, hey,
it's interesting.
we got a question. So does your checking or saving account with LVL earn interest if it's in USD?
There's no interest as far as I know if you just stick it in the USD account. Like what I would recommend is to.
You're not going to get much interest on a savings account anyway these days. So
yeah. Like what I recommend is like, don't like if you're a Bitcoin hodler and say you've got like 5 Bitcoins, say you've got 5 Bitcoins and you want to put it in level, like if you were to also have like $50,000 of cash, you could put that in level, and I wouldn't put it in the savings account. I would put the $50,000 of cash and the 5 Bitcoins into autopilot, and now you can think of, because the autopilot will keep balancing to that sort of 50-50, so it'll keep your 5 Bitcoin position on, but while providing liquidity, and then the cash component is now matching the other side of the liquidity, and now your cash is now able to be farmed for the high returns that market makers get. And you see this in traditional Wall Street markets, and you can get much higher than whatever you get. What do you get in a savings account if you get any, like 0.5%?
I have absolutely no idea.
You might get, I don't have no idea. The first month people were getting 250% return. I don't think that'll be sustained for long as more people get in on it. The first people in will get, most of that return, but it is a high returning strategy, market making, by providing liquidity. So that's probably what I would do. I'll test it a little bit till you're comfortable, because it's not exactly risk free. You will lose some months, you'll make it back in other months, but over the long term, you'll win.
All right. Thanks for that update, Willy. And if you guys want to support, please, if you're interested in Level, please check it out. It's not available in every state yet, but please use the affiliate link if you're going to use it along with some of these others. All right, Willy, I think I'm going to let you go. We will, the next conference coming up is in Las Vegas in April. If you can get out of Hong Kong, we would love to have you back.
I'd love to be there. I think everyone's getting itchy feet.
Again?
That was. I think everyone's getting itchy feet. It'd be great to travel again. And
they are. We're gonna make sure this happens in April. And other than that, we gotta get you to understanding Bitcoin for the dev talks, and also, of course, you're not gonna miss the financial summit. Unfortunately, we're missing it this year.
So sad, yeah. Are we going to do one in Dominican? Is that on, or?
I don't know about Dominican, because maybe Mexico is more likely. So we're considering it. We're looking into it. Because waiting a year and change is too long, especially since it's been a year since the last one. And I'm itching to do something in the Caribbean or Mexico around February, March, not too close to Unconfiscatable, but also if you're going to come to town, would be great to just have you stick around this area for both.
Yeah, that sounds great. I would love to come.
All right, sounds perfect. All right, Ugly was in the chat. Ugly, it's probably a little too late to get you on this episode, but I'll reach out this weekend and we'll try to get you on next week for a similar talk like we just did with Willy. All right, guys. Hey, thank you so much for watching. By the way, the place in Bali, this is what the rooms look like. Willy can vouch for that.
Oh my God. It's you guys want to turn up in a world-class resort. Not your sterile, Bali's not sterile at all. It's just full of art and creativity, and just hang with cool people. It's a great week.
All right. Thanks, man. I'm going to stop the screen share here. Hey, guys, thank you so much for watching. It's been an awesome hour and a half with Willy Woo, and hopefully we'll see him on again soon. Reach out anytime, and thank you again for joining.
See you guys.